And now here's Myles with our chart of the day.
Well, on Wednesday morning, we got the latest look at the consumer price index, also known as inflation. And an interesting number in here was what we saw in terms of apparel pricing, a 1.9% drop in the price of apparel month over month. That is the largest drop since January of 1949. So 70 years here for apparel prices to drop this far in 1 month. Now, economists at Pantheon Macroeconomics noting that there was a methodology change here by the BLS, where instead of using a survey of a small number of goods at a variety of retailers, they now use prices from one department store. It's an unnamed department store, but prices from one vendor kind of feeding into this calculation. So we get the sharp drop. Now, on the overall headline number, we saw core inflation rise 2% over last year. That was below the 2.1% expected by economists. That's also right in line with the Fed's target inflation of 2%, but not really showing any reason for the Fed to change its view. So on the margins here, I suppose retail prices or apparel prices kind of making things easier for the Fed. But, you know, we like to make these charts of the day about the bigger economy. I just think it's interesting to see apparel prices dropping that much, quite honestly.
Is Amazon the one company that they decided to use?
Unnamed department store, so I don't think it's Amazon.
So not Amazon. I mean, I do think...
Assume it's a JC or a Macy's, you know, Target, one of those.
I mean, where is inflation?
Yeah, that's what I was going to say, right?
Like, if apparel is doing this.
Right, and it's just, that's a stunning, shocking drop. And, you know, you wonder... Boy, I mean, could it just be an aberration? But it's supposed to be emblematic of the business, obviously. That's why they're doing it. And, you know, sure, I mean, where is the inflation? It's certainly not in that chart.
I would say a couple of things about just how it's done based on where people shop now. There's so many direct-to-consumer brands. You're either going direct-to-consumer, I'm renting a lot of clothes, you're buying your clothes online. I mean, just going to one bricks and mortar chain, I think it would be hard to be able to encompass, given how shopping habits have changed so much, to be able to get an accurate read.
Yeah, but I think what's interesting also is we all know that if you go into one department store, the prices are shockingly low in terms of what's on sale and how often some things are on sale. So you ask where the inflation is, it's in housing prices, right? OER, owner's equivalent rent, up 0.4% in March. OER growth has been outpacing overall inflation, been outpacing wage growth, been outpacing kind of any other price increase we're seeing in the economy steadily for the last 10 years. So that's really the simplest answer to that.
That's the one business that's not directly affected by technology. I mean, I understand Zillow, et cetera, but every other business, of course, apparel, because it's all bought and sold online, but energy, which of course technology is driving the price down every single year.
Digital deflation.
Right, exactly. Digital deflation is so powerful that I think this really shows that.
I love this chart. I want to see it next month. Andy Serwer.
Yes.
Do it next month.
Thanks so much.
Thank you.